Cathie Wood, renowned for her visionary insights in the world of finance and technology, underscores how Tesla has redefined the automotive industry by pioneering its own chip design. Drawing parallels to Apple's transformative approach to smartphones, she emphasizes Tesla's lead in battery technology, proprietary chips, real-world driving data, and over-the-air software updates as formidable barriers to entry. In this paradigm shift toward electric and autonomous vehicles would predict substantial growth, reinforcing her confidence in Tesla's future.
Tesla is the only auto manufacturer to have designed its own chip. Tesla is taking a leaf from Apple's book. This is not like the manufacturing of traditional autos. It's a completely different game. So if you look at the revenue growth the last 5 years, it's compounded at roughly 48% per year. And that was, as you recall, when Tesla was experiencing quite a bit of controversy. Our forecast for the next 10 years is in the 50 to 60% range, depends if you take our bull or our bear case. And there are a few reasons. There are 4 barriers to entry that seem to have gotten higher in Tesla's favor. The first is battery technology. So Tesla is the only car manufacturer, with the exception of just a couple in China, the only car manufacturer that decided to ride down the cost curve of the consumer electronics industry using batteries that we find in our laptops, our cell phones. And when Tesla decided to do that, auto manufacturers actually laughed at it, as did auto analysts, because there were advertised or publicized battery blowups on airplanes. And so there was a banning of that kind of battery. So because of that, its costs are so much lower today. The cost of its battery, or its battery pack system, is so much lower than other auto manufacturers that if they really want to compete with Tesla, they're going to have to lose money in electric vehicles while their gas-powered vehicle sales are falling.
Cathie Wood highlights Tesla's unique position in the auto industry, emphasizing its groundbreaking approach to chip design and battery technology. She points out that Tesla's revenue growth has been exceptional, compounding at approximately 48% annually over the past 5 years, even during times of controversy. Looking ahead, Wood forecasts a continued growth rate of 50 to 60% for the next decade. She underscores that Tesla's advantages, especially in battery technology, pose significant barriers to entry for other car manufacturers, making it challenging for them to compete without losing money in the electric vehicle market.
The alternative will be less power or less range. So we're seeing a lot of permutations around that. So battery, still 3 to 4 years ahead in terms of cost declines of other auto manufacturers who decided to use lithium-ion pouch technology as opposed to the cylindrical batteries that Tesla uses. The second barrier to entry, and this I think is the critical one from a valuation and a growth point of view. Tesla is the only auto manufacturer to have designed its own chip. Tesla is taking a leaf from Apple's book. If you remember in the day, Apple was the upstart. Nokia, Motorola, and Ericsson were the winners in the cell phone space. Apple was this upstart that had the point of view, Steve Jobs, that this was not just a phone, it was going to become a computer in our pockets. And he was right. And I'll never forget the delight I felt when I was able to access the internet on my phone. I just thought this was revolutionary. The others didn't follow. They didn't have their own chip. They didn't have the vision. And today, even today, when Apple's market share has gone down to 12%, it takes most of the profits out of the global smartphone market. And then the other two barriers to entry. So the artificial intelligence chip, why is that important? This is all about autonomous travel. And it's the only one doing this. And we believe that the other barrier to entry they have is the billions upon billions upon billions of miles of real world driving data that Tesla has accumulated, so that with its AI expertise, Andrej Karpathy is the expert in autonomous transportation. They now have more corner cases to train their systems on than any other company. It's not going to be possible for these companies to catch up, because Tesla already has more than a million robots, including my Model 3, roaming around, collecting data and sending it back every day. And then the other barrier to entry, which I'm surprised this one still exists, is over-the-air software updates. I got my Model 3 in 2018, and I've never had to take it in for a problem. Tesla apparently has diagnosed any problems I've had and corrected them before I see them or experience them. The only problem I've had is a nail in a tire, and of course software could not correct that, but that was it.
Cathie Wood underscores the strategic advantages that set Tesla apart from traditional automakers. She compares Tesla's approach to Apple's early vision of smartphones as more than just phones, emphasizing the importance of Tesla designing its own chips for autonomous driving, akin to Apple's success in the smartphone industry. Wood points out that Tesla's extensive real-world driving data and over-the-air software updates further solidify its lead in the electric vehicle market. Her insights highlight Tesla's forward-thinking strategy and its potential for continued growth in the autonomous driving sector.
And so those four barriers to entry have given Tesla the lead. And so our base case now, I think the stock is around $200. Our base case for 2027 with autonomous mobility in there is $2,000. And our confidence in that has grown because what we're seeing now is Tesla able to scale EV manufacturing in a way that no one else, except perhaps BYD in China, no one else is doing this yet. And Tesla had to go through a huge learning curve to get there. This is not like the manufacturing of traditional autos. It's a completely different game. And so we believe that Tesla's market share, we used to say we thought Tesla would take 25% of the electric vehicle market in 5 years. Now we're saying we believe Tesla will take 25% of the total vehicle market in 5 years. And we think electric will be nearly half of total vehicles sold. The energy crisis is going to accelerate the shift towards electric vehicles. That is already happening. And the new energy vehicle segment, this is a September number for China, was up 202%, whereas total sales were down 13% on a year-over-year basis, total auto sales. And, oh, by the way, Tesla sales in China were up 51%. So there is an accelerated shift towards electric vehicles.
This is one of the most massive misallocations of capital in the history of mankind. We have ahead of us the most magnificent opportunities because of the massive amount of innovation that's taking place. And yet the fear has pushed investors back to their benchmarks. And I think,
not all investors, right? You told me you have nearly $1 billion in inflows since January 17th.
Yes, thank you. And that's in our flagship fund, $1 billion in inflows. And I think many people are saying, innovation solves problems. We now have a lot more problems. That 358% increase during the coronavirus is because right before it, we were slammed. We were slammed because of risk aversion. Once again, everybody going back to their benchmarks. And then everybody woke up one day and said, wait a minute, innovation is going to help us solve these problems. And we certainly were beating that drum. And anyone who got in near that low had a tremendous ride. I feel we're back there again. And now with the Ukraine-Russian issues, again, we have many more problems. Certainly when it comes to oil, this is only going to accelerate the push towards electric vehicles and autonomous transportation.
Which is good for your number one holding, Tesla.
As we navigate a rapidly evolving automotive landscape, Cathie Wood's forward-looking analysis illuminates Tesla's exceptional position. With its cutting-edge innovations, Tesla has surged ahead, poised to capture a significant share of the total vehicle market. In the midst of global challenges, the transition to electric and autonomous mobility gains momentum, making Tesla an emblematic investment opportunity in this era of transformative change.